This is Cashflow Ninja, episode 224 with Dave Zook.
Welcome to the Cashflow Ninja, the podcast sharing how to create income streams and manage, multiply, and protect your wealth in the new economy. Here is your host inside the dojo, MC Laubscher.
Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show, we're looking at a syndication opportunity in Belize. My returning guest in this episode is my friend Dave Zook. Dave is a successful business owner and an experienced real estate investor active in the multi-family apartment space and resort community development with real estate holdings in several states and several countries. Dave has purchased over $100 million worth of real estate since 2009 and has over 2,700 multifamily apartments in his portfolio. Together with his business partner, Dave is a renowned and trusted professional resource in the automatic teller machine, the ATM investment market. They have deployed over $40 million in investor capital, and they are heavily invested personally in this space. Dave, along with his development partners, is actively involved in the early stage planning and development of the largest resort community, Mahogany Bay Village, on the Island of Ambergris Caye, Belize, which has been rated the #1 island in the world 2 years in a row by TripAdvisor, and is one of the fastest growing regions in the Caribbean. Mahogany Bay Village is scheduled to open in the fall of 2017 as a Hilton resort. I'm very excited to dive into this syndication opportunity in Belize with Dave and also hear about his travels and his experiences. He was recently asked to speak at a conference held on Jekyll Island, and Dave was also able to sit down with a friend of the show and previous guest, Mr. G. Edward Griffin, and interview him on Jekyll Island, which is just awesome. So very excited to dive into all of these topics with Dave. Please share your feedback and thoughts on today's interview. You can let me know your thoughts on Twitter by tweeting me at MC Laubscher or by email at info@cashflowninja.com. And please remember to join our mailing list by signing up at cashflowninja.com or texting Cashflow Ninja to 44222. To ensure you never miss one of our episodes, you can download our free interactive smartphone apps on the Apple and Google Play app stores. I've also created a Cashflow Ninja investment group where I share opportunities that I'm investing in with my fellow investors. If you're interested in joining this group, please email me at info@cashflowninja.com and we will continue the conversation to see if you're a good fit for our group. I've always thought that if there's only a handful of people that have built indestructible wealth in any economy and any market, why are we following the advice and doing what the majority of people are doing that are struggling financially? My friend Dave Zook says you can be conventional or you can be wealthy, but you need to pick one. At The Real Asset Investor, Dave and his company create value for investors looking for higher yield returns from real estate ventures domestically and internationally. To learn more about this exciting investment opportunities The Real Asset Investor offers, such as the syndication opportunity at Mahogany Bay Village in Belize, investment opportunities in the multifamily space in the United States, and ATM syndication opportunities, please visit cashflowninja.com/real asset investor. Have you read Rich Dad Poor Dad? Are you interested in real estate investing and don't know where to start or how to get the results you want? For valuable information to get you started, visit JoinOps Properties at joinopsproperties.com. The wealthiest investors on the planet know how to capture their wealth and leverage it to perpetually grow it. If you're interested in learning the premier strategies of the wealthiest individuals and families on the planet, you can access your free webinar at cashflowninja.com/be the bank. Dave, welcome to the show.
Thanks for having me back, MC. I'm looking forward to it.
Yeah, fantastic having you back. Now, for listeners that are not familiar and did not listen to the first episode, which I will put links in the show notes, Highly recommend that you listen to that one that I had with Dave. Can you share a little bit about your background and what you do at the Real Asset Investor?
Yeah, so I was an investor and entrepreneur from my early teens, and I grew up in an entrepreneurial family, but I did decide early on that I wasn't going to invest in real estate. My dad invested in some real estate, and he self-managed some of his real estate, and it just, I saw that, and I was like, you know what, there's got to be a better way to make money. And so I invested in businesses, and I invested in several different businesses, founded several businesses, and got to the point where they were doing really well. Got myself in a position where I ended up having a big tax problem, big tax liability, and I got the call on April the 13th. Back a number of years ago, and it was like, hey, in a couple days, in 2 days, you're gonna, despite the fact that you paid your quarterly taxes and we took all the depreciation we could, you still owe a couple $100,000 in 2 days. And I was having all kinds of fun. I was a private money lender. I was doing some flips, house flips. I was, just making a lot of money, having a lot of fun, but it all of a sudden became not so much fun when I had to give, a lot of my earnings back to the government. So during my studies and really getting around the right people and asking a lot of questions and being curious, I discovered that real estate can be not only a good cash flow investment, but it also has a really good tax shelter piece to it. So I chose multifamily and used that as a tax shelter the last, since I started getting into real estate. I mean, I hit the timing right on. I got kind of lucky on that one, but I started really getting serious about investing in real estate in 2000, about 9 or 10. So that's kind of my background, and I've been doing a lot of real estate syndication since. I've syndicated multifamily apartment buildings, a resort in Mahogany Bay Village in Belize, and also we're doing a lot of ATM investing, and just been really busy with that.
You can be conventional or you can be wealthy is one of my favorite quotes of yours, and I've used it quite a number of times since our last conversation.
I heard you use it a number of times, and it's actually been picked up by quite a few other radio shows, and it's been a popular one. So I'm actually getting it trademarked.
That's good, because that's gold right there. And sticking to that philosophy of you can be conventional or you can be wealthy. You've been doing some really interesting stuff too, and sharing your knowledge and your journey at different events and different summits and conferences. One in particular that really intrigued me, because this was my red pill moment, was when I picked up the book The Creature from Jekyll Island by Mr. G. Edward Griffin, and never been the same person since that. And you had the opportunity to attend a conference on Jekyll Island as a speaker hosted by Mr. G. Edward Griffin. How was that?
That was special. I got to present there in front of a group of really accomplished investors, and I got to share in front of G. Edward Griffin that the two books that had the most impact on my life as far as business, investing, government, taxes, the way the world works, it was Robert Kiyosaki's Rich Dad, Poor Dad and G. Edward Griffin's Creature from Jekyll Island. And, for me, it just connected a lot of dots. It seemed like I would go so far and run into a brick wall, and then I'd back up like, what is that all about? And then I'd back up, and then I'd hit that brick wall again. It just seemed like that book, Creature from Jekyll Island, just connected a lot of dots for me, and I could see things. And even today, I can see through a lot of things that I wasn't able to see through. I mean, you see the reporter on CNN blabbering off about some kind of event, and you're just able to see right through that, and know that there's more to the story, and know that the person telling the story may have an agenda, and so it's really helped me to kind of see the truth. And if you read that book and really do a deep dive, I mean, you can't walk away from reading that book and studying his work and be the same. I mean, it just it's even today when you look at what he wrote and what 20 years 30 years later, what actually came to place or happened, he wrote about it. He wrote about it 20 years ago. Right. So it's just really interesting. It was an honor to be there and to speak at the same venue he was at.
Yeah, one of the key takeaways from that book, now that you mention it too, in the book that he wrote, one of the things in quotes from the book, he said, "Bailouts are the name of the game."
Yeah.
And this was way before the bailouts and this massive bailout we had in 2008 and the crisis. Years before that, but to your point, he identified certain trends, and if you know the plan and kind of the agenda of what's to unfold and how money operates and how money works, how central banks are structured, and basically the global monetary system, you can look ahead and see at the same patterns that have evolved over time over this last 100 years. And the other thing that I found so interesting was, it used to be so conspiratorial, this small group of men under the shadows of dark that kind of slipped away and went off to Jekyll Island and created the Federal Reserve. I just find it so comical that the Federal Reserve chairman was basically, or chairwoman was down there at Jekyll Island, proud of how they established it. Actually, for the 100-year anniversary, they had a number of their delegates down there. There's a room, one of the pictures that I saw that you posted, the Federal Reserve room, right, in this resort in Jekyll Island. So very, very open book right now, truly, of how this all started and how the Federal Reserve Bank was created, which is the model for central banks right now out there in the world. So really interesting. The other question that I had was there was also a lot of other incredible speakers. What were some of your biggest takeaways from the other speakers that you listened to at this conference?
There was several. Eric Sprott was there. Got to know him really well. Spent quite a bit of time with him, and he actually even invited me to go with him to Australia to look at a real estate play with him. So I don't know if that'll take place or not, but he talked about, and the conference was largely around the resource space, mining resource space, and so you had a lot of those guys. I was sort of the odd person out talking about cash flow real estate. A lot of the guys in the room were speculators, so but no, it was very interesting, and it was my talk, I felt, was very well received. It was kind of a different look at investing for a lot of these guys. Eric talked a lot about the price of the commodity and what that does to a company's balance sheet versus just being able to increase the amount of that commodity. So I thought that was very interesting. You had a couple guys. One guy was talking about the effect that the electric vehicles are going to have, the effect that that's going to have on us in the next decade or a couple decades. You look at entire countries now setting quotas on getting away from fossil fuels and fossil fuel driven vehicles and going to electric vehicles. So I mean, it's going to create a real demand for some commodities, and we'll see what happens. But it's definitely if you invest in front of the wave, it's just like getting in front of or floating down the river. You're paddling upstream, you're going to have to fight and claw and just spend a whole lot of energy doing it. If you get in front of the wave or even float downstream in the river, it's going to become so much easier. So that's trying to get in front of what's coming down the pike in the next decade or two. That's what that conference was about.
No, and very, very true. Looking at economic cycles and then combining it with certain trends. The fossil fuel one, the electric vehicles, a huge trend. demographic trends, throw that on there, war on cash, money. If we look at the history of money to tie it back into the creature from Jekyll Island, how the global monetary system changes every 30 to 40 years. We're very much overdue for a change in the way that the world's money works and the way that the monetary system is structured. So there's a lot of different trends. And as you mentioned, if we look at these and we can stay ahead of these trends, we can position ourselves to not only survive, but thrive. So back to that being conventional, right? And not seeing these things or being wealthy. Now, Dave, one of the things that we wanted to talk about is just touch upon this very, very exciting opportunity at the Mahogany Bay Village Resort in Ambergris Caye, Belize. Before we touch on that, ATMs has been a very good play for you as well, with a lot of success for yourself and your investors. Can you just touch a little bit on this syndication opportunity as well?
Yeah, so the opportunity is an accredited investor can come in and buy 7 ATM machines in 1 unit. The cost of 1 unit is $104,000. And what happens, our management team goes out and they've got the locations already mapped out. They've structured the deal. They go out and place the machines. About 98% of the time, those machines are going where there was an existing machine there at that same location before. So we have historical data showing exactly what the transaction amount was per month. So it removes a lot of the risk, but the real opportunity for an investor is go in there, own the machines. They can take the depreciation, very good tax-friendly investment. You can write off the whole purchase of $104,000 in the first 5 years. So that gives you a lot of tax-free income. And the cash-on-cash return on that is 24.9%. So it's just a really good cash flow investment vehicle, and it also comes with a lot of tax benefits.
Quite an amazing opportunity. So that's why I just wanted to touch on that. And I know that there's been a lot of success for you and your investors in there. So I just wanted to share that with my listeners. Let's touch on the opportunity in Belize. Can you just share a little bit why the Caribbean, why Belize, what some of the exciting things going on there, and what the opportunity is there?
So why Belize? Why that part of the country? There's a lot of things. There's actually quite a number of things. But when you look at the baby boomer generation, you look at that whole wave of people looking to retire or vacation, and then you look at the projected growth or the interviews of people, large numbers of people that say, well, they're going to the Caribbean or they're going south. I mean, there's that region is attractive for a number of reasons. Number one, it's a fairly friendly part of the world right now. We're not talking about, people fighting and trying to grab resources and all that. It's also, just the weather is friendly. So you got a lot of snowbirds, especially from the Northeast where I'm from. We like to spend a couple weeks of time there in the wintertime as well. But you look at a lot of those things, and then you see what's really happening on the ground, and this is what we've seen over the last 5 years. 3 or 4 years ago, on the island of Ambergris Caye, which is the number one tourist destination in the entire country of Belize, we had 2,000 rooms. And you would think when there's a lot of demand that the supply would increase. But our available rooms right now in the market is 1,800. Can you imagine why that might have happened? Well, what happened is the baby boomers are going on vacation. They're going to this market, falling in love with it, and they're buying up what used to be rental inventory for tourists. So while demand is spiking, the supply is decreasing because people are going to the market and buying it and taking it off the market. So it's just when you look at the fundamentals and realize that it's just a supply-demand crunch, it gets us really exciting about being able to add a couple hundred units of supply to the market that's so tight.
And now another big component of business, and this is one thing that you touched on in our previous conversation too, of how important team is for you, the people that you do business with, right? It's the philosophy of getting the right people on board the bus, and then the bus is going to go someplace special. Can you share a little bit more about the team? And tying into that, strategic partnerships is huge when it comes to syndication and opportunities such as this. So can you speak a little bit on the strategic partnerships that are in place for this opportunity along with the team as well?
Yeah, it's a great question, and one that's really important to me. When you look at my team in the multifamily space, if somebody brings me a deal, the very first thing I'm looking at is not the numbers. It's not the tax benefits. It's not the cash-on-cash return or the IRR. It's always, okay, who's running the deal? Who are the people? Show me the people. And if you can show me a really good, solid team, it's only after that I'll be really interested in the numbers and what that looks like. But I got invited to Belize, and I had done business with this team before, and I trusted this team. I liked the team. I knew what they were capable of doing. So that's really why I went to Belize. Obviously you got to have a good product then as well. But it just, it kind of all aligned. You've got the supply demand issue. It's a beautiful part of the world, very attractive place. It's one of those things like when you have a real serious need in your life, that probably smells to an entrepreneur or an investor like a business opportunity. And to me, when I go to that market, it's like taking care of a need that I have. And so just being able to team up with the right people in that market, at first it wasn't so obvious. Of course you're developing and you're building and trying to gain traction and all that. But 2 years later, we're now 2 or 3 years later, we're now aligned with Hilton. We're a Hilton resort. We open as a Hilton resort on December 6th, just a few months from now. And we're also aligned with Time Inc. People want to come, they want to do their own due diligence, and they should. I always highly recommend that people come down and do our discovery trip to Belize. So I always encourage doing their due diligence. But when you talk about the level of due diligence that we went through with Hilton and Time Inc., you're talking with Hilton, it was 1 year and 3 months. Their due diligence period from the time we first started talking to them and then signed an LOI. It was 1 year and 3 months, and it was excruciating. So just that kind of due diligence that's already been done to the property and on the team. Look, they're looking at the team as well. They're not only looking at the project; they're looking at the team, and the same thing that attracted me. The quality of the team is the same thing that's attracted them.
Awesome stuff, and very excited to see it also aligned and opening as a Hilton brand. Very, very strong, recognizable brand. And then, of course, this power team that you have down there. The management of this, tying in part of the team, very important part of analyzing any deal. Can you talk a little bit about how this investment will be managed and what value the management team will bring for investors?
Yeah, well, it's just like a multifamily property. A really good management team or not can make or break the property. And, even though we have the Hilton brand behind us, look at Hilton more just like the marketing arm or the marketing engine to the project. But the management team is also, there's a couple of the development team members that are on the management team. So they got skin in the game, not only on the development side, but also on the management side. So it makes me feel real comfortable. It's the same way on my multifamily investments. My management team, the principal of the management team is also my partner in every deal that I do in Memphis. So it doesn't have to be that way, but it's it's got skin in the game, and it's the same way with our management team down in Belize.
You're listening to Dave Zook on the Cashflow Ninja podcast. We will be right back after a word from our sponsor. This is MC Laubscher, the host of the Cashflow Ninja podcast. As you may know, I'm also the president and chief wealth strategist of Valhalla Wealth Financial. We help individuals, families, small businesses, entrepreneurs and professionals build their wealth outside of Wall Street and help investors maximize the use of every dollar in their personal economy and boost their investment gains. We do this by combining the capital and investments with the financial vehicle of the wealthy according to the infinite banking concept. If you're interested to learn more about privatized banking and the infinite banking concept, you can access an exclusive webinar at cashflowninja.com/be the bank. You're listening to Dave Zook on the Cashflow Ninja podcast, and now back to our interview. Looking at the financing, which is a next step in evaluating this, some people might see what you would share as a challenge. Entrepreneurs and investors see it as a huge opportunity regarding on this. Can you share a little bit more information on the financing, if any available, and why this is such an opportunity?
You know, it's funny. In whatever area of business, investing, life, whatever, whenever there's massive challenges or disruption, there's massive opportunity. I mean, there is no way, if we wouldn't have had the massive challenge or crisis in 2008 and 2009 that we did, there's no way we could have went out and built $150 million portfolio of multifamily real estate. There's no way that could have happened. It wouldn't have made sense. The numbers wouldn't have made sense. We couldn't have done it. It's the same way in any situation. When you talk about lack of financing, lack of construction financing in a project like Mahogany Bay Village, you're talking about a problem. You're talking about somebody not being able to come in and buy a small one-bedroom building for, $150,000 to $250,000. A lot of people can come in and especially on a payment plan, they can make payments on $150,000 to $250,000. When you talk about, well, no, the only way you got access into this market is $850,000 and there's no financing, that changes everything. But what it does for us, though, it creates a massive amount of opportunity for an investor coming in, because you're not competing with all that funny money. You're not competing with all the debt. So you're able to come in and buy a lot with 3 homes on it, waterfront, for $850,000. That same lot today appraises for $1.4 million. Couple reasons. One is the financing, lack thereof. And the other is the resort's not open, won't be open until December 6th, and there hasn't been a ton of people who've seen the resort. So when those two things go away, that window of opportunity is going to close quick.
Very, very powerful. So the lot, so just the mechanics of the deal, $850K is a lot. There's 3 homes that you could put on that. Is that, as you mentioned, is that 1 bedroom? Is that 2 bedroom? What's kind of the setup of that? And I like the fact that already it's how you buy, right? You make your money on the buy. That already at $850K, you're at lots that is on the beach appraising for 1.4.
Well, there is the lots that are there at MBV. We do have a beach club, but it's not right at the resort, so they're canal front.
Okay.
Waterfront, but it's all on canals. Every home on the property is canal front. Okay. So there's different configurations. There's 1 bedrooms. There's 2.5 bedrooms. There's like a 4-plex. So they're different configurations. But $850,000. The example that I'll use is a 2.5 bedroom family cottage and 2 1-bedroom garden cottages. So it's that configuration is you can buy that lot furnished, ready to go. For $850,000, and it appraises at 1.4.
And what was some of the numbers that you guys were looking at as far as returns on the investment? Can you share a little bit more information on that?
So we're projecting a 10 to 12% return, but we don't think that's realistic. I mean, you're looking at our numbers. Our projected numbers are on occupancy is 82%. Right across the street, the actual occupancy is 93. The annual occupancy is 93%, and they're booked out for not only this coming Christmas and New Year, but they're booked out for 2018 and 19 Christmas and New Year. So we know the demand is there, and their nightly room rental across the street is almost double what our nightly room rental is. So when we're saying 10 to 12%, we think we're being super conservative.
Now, risk management. What are some of the risks associated with an investment like that, and what are some of the risk management strategies that you guys have in place?
So when you look at risk, any investment is going to have risk, and this one obviously does too. Most of over 60% of our travelers come from United States and Canada. So if there was a serious, say, recession or downturn, if there was another 2008 or 2009 in the United States or Canada, would it affect our tourism numbers? I would imagine so. When you look at history, though, and what happened in the tourism market back in 2008 and 9, our tourism market in Belize dropped 2%, while the rest of the Caribbean was right about 20%. So that tells you something. We've got a different traveler than, say, Cancun. Cancun, a lot of there's some subsidizing going on there that gets people to the market. There's none of that in Belize. It's a small boutique market, in a small country, and it's not a $99 a night market, and it's also not a $199 to get a flight there from the United States. So it's a little bit more of an expensive market. So our travelers are a little bit more connected and well-heeled. So it's not as volatile as some of the Caribbean markets. So I would say the risk may be a recession or a downturn in the economy in the United States and Canada, but although we don't think that it would be all that severe if you look at history and what happened in 2008 and 9.
Right. And then the other question I have to ask too is we've seen quite a number of storms hitting the U.S. coastline in the Caribbean and so forth. That might be something that's up there too. I'm not quite sure what the Belize's history is with any of these tropical storms.
Yeah, so our homes are built around 4 feet above sea level. And they're also, the buildings there are built to Cat 3 and Cat 5 hurricane standards. And the architects and engineers are one of the leading firms in the Caribbean. So we didn't, as you can imagine, we didn't go in and just start slapping buildings together. This was well thought out and some of the best engineers and architects in the country. The other thing is all of your storms come from the ocean side. Well, we're not on the east side of the island. We're on the west side of the island. In fact, our resort is the only sunset facing resort on the island. The whole island was built on the east side because it was, 15 years ago, it was a small, quiet little fishing village.
Right.
And so everything was built facing out toward the Great Barrier Reef. We have the largest living barrier reef in the world. So Belize it's not necessarily a beach destination, but it's a water sports destination. It's consistently ranked in the number, in the top 3 of fishing, diving, snorkeling, and that kind of thing. And if you look at that as an avatar of the kind of people that come to the market, those are usually a little bit more, maybe deeper pocketed travelers. The kind who do scuba diving. I mean, scuba diving is a little bit like golf. It's expensive. And so that's kind of our avatar.
Fantastic. Now, Dave, you're putting together a webinar just to educate investors on this as well. And you've mentioned that there's a discovery trip November 10th to 13th. What are some of the ways that people and my listeners can reach out to you and get more information on this? How can they get hold of the webinar? Any contact points for people to find out more about this opportunity?
Well, I made it real easy for you. How about Belize at therealassetinvestor.com. Belize at therealassetinvestor.com. If you email me, I'd be happy to send you the webinar. And we have market reports. I have a little video, just a couple minutes long, that explains what they can expect if they decide to come to the market and check it out. And I just checked. We do have room for a few more guys on the November 10th to the 13th discovery trip. So I'd be happy to get your listeners the information that they need to make a wise decision and hook them up with the guys that are going down on the trip.
Fantastic. Well, Dave, thank you so much for coming on the show and sharing this opportunity and just your experiences around these many travels that you've done and people that you've met, and especially that trip on Jekyll Island. This has been awesome connecting again.
Thank you, MC. It was fun.
Thank you for joining Dave Zook and myself on the Cashflow Ninja today. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with your family, friends, and your network. Thank you so much for spending your most valuable asset with me, your time. And if there's any way that I can provide more value for you and serve you better at the Cashflow Ninja, please reach out to me at info@cashflowninja.com. If you're not a subscriber to our newsletter or on our mailing list, you can sign up for our newsletter at cashflowninja.com or text Cashflow Ninja to 44222. Smart investors know that the banks actually don't own most automatic teller machines. In fact, the opportunity for private investment provides stellar passive returns, figures in the double digits, with the added bonus that most of the income is tax-free. Who wants to walk blindly past an ATM and not cash in on that opportunity? ATM machine ownership brings you a steady stream of hands-off passive income. Dave Zook and the Real Asset Investor team have been providing opportunities for investors in this uptrending activity of ATM use. If you're an accredited investor and would like more information on how you can invest in this exclusive asset class that very few investors will ever have access to, you can sign up for your free webinar on how to create income streams from ATMs at cashflowninja.com/real asset investor. Jimmy Freeland and Bob Scott have been in your shoes and have used real estate investing to become financially free. They've designed a system to take any beginner to an experienced deal-making investor in the least amount of time. They offer opportunities from basic education, coaching, bridge loan investing to turnkey investments in the cash flowing market of St. Louis, Missouri. For more information, please visit joinopsproperties.com or call Jimmy and Bob at 314-799-2247. The wealthiest investors on the planet know how to capture their wealth and leverage it to perpetually grow it. If you're interested in learning the premier strategies of the wealthiest individuals and families on the planet, you can access your free webinar at cashflowninja.com/be-the-bank. That's our show for today, everyone. Until next time, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.